Good evening. Thank you. We're glad to be here. Thank you, Ricky, for inviting us, and thank you for Huspy for letting us into your place. Maybe if I just go around, let everybody do a quick one-liner about who they are and what they're doing here, it would be great.
Yeah, so hi guys, David Henry, one of several CPOs here. Been doing digital banking for the last kind of 9.5 years. I'm on my 4th challenger bank build now, which is, I'm clearly a glutton for punishment, I guess.
Hey, I'm Marc. I'm head of product at Huspy. We have a product that helps real estate agents and mortgage brokers to sell more houses faster and make more money per house.
Good to meet you as well. I'm Kristjan. I'm the Chief Product Officer at Finom. We are pan-European Fintech, competing with the likes of Revolut and Monzo. And prior to that, spent about 5 years as CPO at OakNorth in the UK.
Hi everyone, my name is Fernando Fanton. I was until a month ago Chief Product Officer of Monzo, the neobank in the UK, and I moved to Dubai 1 month ago for Property Finder, and so far I don't think it's hot at all, and I don't think the traffic is too bad. Very good to be here.
Hi everyone, I'm Roger Rouhana. I'm the co-founder and CEO of Alpheya. We are an Abu Dhabi-based wealth tech company, and I'm very excited to be here. And Ricky, really thank you so much for organizing this. He's a great recruiter, by the way.
And I'm Khaled Lababidi. I'm a partner at Arbor Ventures. We're a fintech-focused fund investing out of Asia, the Middle East, and then the US. Can you guys hear? Not so great. So maybe I could just spend 2 minutes just kind of putting things into context when we talk about challenger banks and scale. I was just doing a little bit of ChatGPT right before this. One thing that I just want to say in terms of the world of challenger banks, what we've seen is that there's been somewhere in the range of 250 to 300 of these challenger banks that have been built over the last, let's call it the decade or so. Of those, there's actually only been really about 20 or 30 that have reached scale. So really a small portion of these companies are the ones that get there. And then even when I was kind of talking to my colleagues here, what you also have to realize is that there's really a lot of effort that needs to go in to get one of these challenger banks live. Number one, it usually takes anywhere between 5 and 7 years to kind of hit your first 10 million. And then number two is you probably need about $1 billion to do it. So it's not something that's simple to do. I'll also make the comment that we actually passed on lots of now famous challenger banks. We actually had an opportunity to invest into Revolut on the Series A at a $50 million valuation. We had an opportunity to go into Chime at the Series A, which was also somewhere in the range of about a $50 million valuation. Now kind of sitting where, I don't know, a couple of $1 billion, and Revolut probably, the last round was 45. So definitely, we as VCs get it wrong. But maybe what I could do is, go to some of my colleagues here, because also the thing that we saw when we were looking at these things is right at the beginning, everybody was kind of talking about like, how do you get your first customers? And so at some point, the thing was always around, these cool metal cards, as an example, obviously Revolut did it way with FX and things like that. But maybe I can go around and maybe ask Fernando first is, what was that thing, that got Monzo to really get, your first, couple of million, user base?
Yeah, I think there's two things that are true. I think fintech is, to me, an amazing opportunity. Still today, right? It's still for folks that want to start that journey. And it is a bit difficult at the beginning, right? Because there's a lot of barriers they have to go through. Of course, there are regulatory barriers, and it's hard to launch a bank that has no users, right? If you want to pay someone, sometimes it's not as easy, and there's a lot of things that you have to build to have a good experience. I think what Monzo did really well is clearly had a passion for customer experience. And it was very obvious from the design to the messaging that it was a different bank. It was a bank that the bank wins when you win. And as we know, still today, a lot of banks are not like that. And you start with a growth loop that actually works. At the beginning, we didn't have mortgages. There was a lot of things that Monzo has today, or Revolut, or other neobanks have today, that we didn't have. But the basic functionality worked really, really well. You were in control of your finances. The clarity of what you're spending was very clear. The famous spending block came around. And then the referral takes life of its own, right? If you really love a product, you tell your friends. And then the product make it easy to do that. So it takes a lot of effort, but then the momentum starts to build, and then I personally believe is unstoppable. Right?
Interesting. Marc, you were over at Revolut for a little while. I mean, could you tell us a little bit about like the early days at Revolut? What was the idea around the design? How were you looking at customers? How were you attracting them?
If someone has a mic. Yeah, I think Revolut just made early bets, right? I think they went for a very low friction product that essentially lived alongside your bank account, so you didn't have to think about switching. Simply a wallet with a card attached to it, and you can change any currency at spot rate. So that's the first bet that they made, right? So people were more than happy using it as a payments product while keeping their bank account. So that allowed virtually like no friction. People just downloaded it. That's the first bet. The second bet is they went wide. So there was strong product market fit pretty much all across Europe. So they didn't wait. Immediately they went for a Lithuanian banking license. And well, an e-money license before that, and yeah, that was it, right? They went for a big addressable market, which is very simple.
Yeah. And then just maybe kind of thinking back like to like your first regions that you were obviously covering. You know, just walk us through, you know, the idea of which markets you would go after, or maybe even, you know, how you start to think about the second, third, fourth markets, you know, over at Revolut and Monzo.
Do you want to start?
Yeah. Well, Monzo is still primarily in the UK, and I'm not there anymore to talk about the other countries as well. I think obviously Europe has the angle of, which was great before Brexit, of passports, and then the European license allows you to passport easily between countries. The way I think about it though is fairly straightforward personally about neobanks, right? The drivers of growth are, and revenue as well, are FX. So if you are in Europe and you're multiple countries in Europe, you have the corridors, right? And that has been famously for Revolut and many others a great avenue of growth. Then the other one you have is lending, and Nubank maybe is one of the most famous that started with a very small credit card and allowing users that didn't have access to credit before to now have it. And the third one, which I think is the most difficult personally, and maybe was a case of Monzo, is to go and become your primary bank. So not just go on the side and you say you have the bank, say trying to really own the experience. And that's a longer discussion, but that requires that you like the bank so much that sooner or later, the majority of your activity moves from your traditional or legacy bank into the neobank. That's, in my opinion, the most profitable in the long run. But at the end, those, in my opinion, are the top 3 drivers of growth. And then if you can combine some of them, of course, that's the holy grail.
And if I may rebound on that, so obviously you pointed to something that is still kind of an immutable thing in the UK, for example, where primary banks are still the large legacy banks, and very few neobanks have managed to build that trust. So what do you think, beyond the Monzo or the couple of neobanks that made it, what are the others getting wrong?
Yeah, well, the first thing is that you really have to try, right? Because these are all the things that people trust that have to work, right? The transactions, the payments, they have to build that trust. So everything you do, if something goes wrong, it has to be resolved quickly. It has to be visible. Customer support has to work very well. It's all about trust, primacy. You want to You want to really do all the details very, very well, and that's a lot of work to do. The fin crime is a big part of the engine of any bank or neobank, and it takes a lot of effort to do it right. But it pays off. It pays off. So, and I think it takes time. It would take a year or at least to see the journey. Nobody comes in and gives you all your money the first day. You sign up on the bank, 5 minutes, and then the next day you transfer all your savings and all your wealth to the neobank. It really happens within a year. So you have a lot of opportunities in every interaction, every time they open the app, every time they spend with the card, to gain that trust. And then what we've seen, at least, is over a year or so, if you do it well, people will shift. So they will spend the majority or a good chunk of their income or the finances with the new bank because it's just better, right?
David, same question to you. Serial neobank builder.
I think that the trust deficit is a huge challenge in every market, and it's the building that and how do you build that, and it's easier in some than others. I mean, in the UK, it's still a challenge, even though you've got the financial compensation scheme that insures your deposits up to £85,000. In Europe, I think it's €100,000. So for most people, it doesn't matter, but they still are uncomfortable, and that's an interesting gap. That's still there's no great exemplar for bridging that. I think in countries like Brazil, with Nubank, it's slightly easier because the trust doesn't exist in the banking sector. So they're coming at it from a perspective of, I'm the new player, but do you really trust me any less than you trust that guy? The answer is usually no. So I think that's a key issue. I think often you find as well it's this distribution problems when we talk about different markets and I'm going through this at the moment with my the new entity going up, is which markets are we going to go play in? And the regulatory hoops you have to jump through to be international. And Revolut have obviously been famously, Nikolai's quite outspoken about his views on the UK regulatory regime. And it's certainly a challenge and the equivocation, but when you're picking markets, it's key that you understand how can I distribute? Because one of my former employers has a great product, a great proposition, but they couldn't crack the distribution because they weren't allowed to market in the way they wanted to build awareness of the brand. So you could have the best product market fit in the world, but if no one knows you exist, if you can't get it into the hands of users, it doesn't matter. And so for banking more than most industries, that is much harder because of the burden of regulation that falls on you to who can you advertise to, what can you actually say about what you do, because you can't stray into investment advice as an example. I can tell you I have crypto, I can't tell you to buy crypto because that would be investment advice and that would be bad. So I think that's the extra challenge I see a lot, is around that distribution piece.
Kristjan, would love to hear, what you guys are building, where you guys are in the process, and how do you look at a region like the Middle East as an example, or are you guys sticking in core markets for yourself?
Yeah, so a little bit about us. Finom is probably one of the kind of later entrants to the kind of fintech market in Europe. Our ambition is to be pan-European, and just to take something that you said. So in the UK, the neobank market now is roughly 20%, 22% of the market share, which is massive. And kind of what you've seen is neobanks have come in, they've taken personal space, they've taken small SME space. The traditional banks have gone up market into corporate, and that's kind of left this middle segment effectively. And so what we also are observing is that a lot of countries in Europe are well behind the UK. And neobank penetration hasn't really reached that yet. So, Germany, pretty decent, France, pretty well advanced, but go to countries like Italy, go to countries like Spain, the world is very, very different. And so what our thesis is that will change in the next couple of years. And very much like it did in the UK, there will be 1, 2, 3, maybe top players in that space. And we aim to be one of them. But we are fully focused on the European market as of now. And so we do have clients in the Middle East who do business in Europe, actually quite a lot of them, and a growing number of people who have businesses in Europe and live in the Middle East. And so that's sort of the space we tackle. But we are, again, fully SME-based fintech. I think maybe like an interesting fact is, you mentioned passporting. Passporting is nice because it allows you to get the regulation done, but all countries in Europe are quite different, even how the payment rails are built, right? And so if you want to be pan-European, you end up building a ton of infrastructure to get that stood up, which obviously Revolut has done exceptionally well and others too. But there's a sort of a massive cost associated with trying to be pan-European. And so absolutely, I can see there be fintechs who would probably expand into Middle East, other regions as well.
Yeah, great. I mean, maybe just kind of, you've talked a little bit about the Middle East. David, I want to come to you in a sec. But, I think what we've seen in the Middle East is we've seen, over the last couple of years, lots of different, banks who have become either neobanks, or we've seen new entrants, develop, banks. I think you've worked on, Vision Bank, in Saudi. There's D360 that it's in Saudi. We have obviously Weo Bank that's here. I mean, David, I'm going to probably ask you the question here is, do we need another digital bank, in the Middle East?
Yeah, the Middle East is fascinating because Saudi and UAE are the exact opposite of one another. So the UAE is 10 million people, but 55 plus or minus banks. Saudi is 35 million people, but only 14 banks. So much bigger, 3 times the population and less than a third of the bank population, and the inverse here. But both markets have a similar structure insofar as part of what Kristjan is talking about. The big banks, the big institutions, the FABs, the MBDs, the Al Rajhis, they run around after ADNOC and Aramco and these huge quasi-governmental state-backed businesses that throw off billions of dollars a year in fees for the banks that support them. And so that sustained them, and that's great. And they are some of the most profitable banks in the world. The Saudi banking sector, the ROE is huge versus Western competitors. So it's difficult, but as a result, those banks get so fat off those fees and margins, they care less about the lower income segments. And SMEs in particular on the corporate side, but on the retail side, it's the same. There's huge migrant workforces in these countries that come in and come out. And we're talking about international regulation. It's a challenge because your credit score is not portable with you. And we're just sat in the UAE talking, there's no Emiratis on this panel. Fernando, Kristjan have just relocated to Dubai. Even if you had an HSBC account in the UK, they'd walk into a branch here and they'd look at you and go, who the hell are you? I don't know who you are. It doesn't matter that you know them or you've got 10 years banking history with them. They don't know who you are. So there's still plenty of scope to work, but it still has to be focused on the fundamental. I think the point you made at the start of however many challenger banks, hundreds of challenger banks launched around the world, only 20 to 30 have reached profitability and scale, is because so many of them don't focus on an actual use case. What problem are they solving beyond, wouldn't it be nice if this app was better? And yes, it would be lovely, but why am I going to move my salary? Why am I going to do that? Why am I going to move my net worth from this account to that account? And there's different ways to crack that problem, but so many challenger banks start with an individual with a desire to own a bank because that sounds cool. And this part of the world is great for that. I've met so many guys here who are very wealthy, like, I want to own a bank. And I'm like, no, you don't. No, you don't. Because it's more expensive than you think, and you can't do it unless you are doing it for a specific reason. I'm solving a problem. I like to use the jobs to be done framework to try and frame that with these guys, but it's definitely a challenge. So I think there's definitely space here. The Sharia Compliant angle also, Revolut's coming into the market. It's going to be interesting. Weir is obviously not Sharia compliant, but that angle in particular in Saudi obviously is a non-negotiable. If you're not, you can't play. So I think there's definitely space, provided they go back to fundamentals.
Maybe shifting gears to the how, and you've all gone through sort of phenomenally successful path. Can you just maybe describe the couple of cultural attributes that made the places you were at so special? Fernando, maybe let's start with you.
Sure. I think I joined Monzo a bit around 3 years ago, or a bit more. And the thing that really struck me is that every single person, every single one, every designer, data engineer, every person in that building absolutely owned the passion for the customer experience. There was a story that I thought wasn't real at the beginning when they said, when we started, we used to have people call us on Christmas and thank us for some of how they help them with when they have a problem. And I thought, oh, okay, what a nice story. But so I asked, come on, is that Christmas stories real? And then I listened to some of them. So it was real because you have to understand, finance runs everything. All the physical assets are owned on the back with your financial instrument. If you are a business, you need SMEs, you need loans, you need to run payment, payroll. If you're an individual or retail user,
you want to build your credit, you want access to a mortgage, which I think in this market is absolutely massive. And of course, what you don't want is when you have a problem, not have somebody with empathy on the other side or care. And legacy banks, and I won't name ones here, but even I created an account here and some things just didn't work. And you're like, is anybody on the other side? Is anybody even paying attention? And in fintech, or particularly in banks, in neobanks, you better be, because this is the most important thing that people have outside of their health. And so you really have to have that absolute passion. And of course, you have to solve a real problem to your case. It's just not a great app. Great app is awesome. Of course, it has to work, it has to be beautiful, ideally. But what is the problem that you're solving at the end? And that makes a big difference. And then the people do the rest. You always pay your friends, so you will tell them, hey, why don't you have Monzo or whatever neobank is? It's much better. And for us, at least, referrals, people referring their friends is still to this day the biggest way of growth.
Kristjan.
Yeah, it's a good one. I think maybe reflecting back on my experience at OakNorth, just a bit of background. So OakNorth was launched 2015, the same year as Monzo, the same year as Revolut. It was kind of the revolution of fintech in the UK, right? So lots of big names came out of it. And one of the things we were debating very early on is kind of like, where do we launch? Or like, kind of where's the pocket, right? And the thesis was always that fintech is here to come. Fintech will be there. The lower space will get disrupted. Traditional banks will go up market, and this will leave this missing middle, what we call the missing middle, in the middle to tackle, right? And I cannot name the number of conversations we had internally with investors and others having to defend that point. And I think what we've managed to do throughout the years is like stay incredibly loyal to that original thesis. And now looking back to it, it's obviously that has panned out, right? So, fintechs have taken the lower end of the market and traditional banks have gone up the market. And there is truly a gap in the middle. But I think when you're in the midst of, when you launch a new thing, where do we launch? How do we launch? How do we make it profitable? How do we get scale? You sometimes tend to get sidetracked. And we also knew that solving for bigger businesses, for example, that we tackle with OakNorth is going to be a lot more complex, right? They are not easy corporate structures. We had companies with 100 entities in between. And so it requires a lot more patience to build, which I think we managed to do. And so, yeah, I think perseverance and being kind of loyal, perhaps to your vision, flexible in strategy. But I think that would be my probably biggest advice.
Fantastic. Marc.
It was a cultural traits, right? I think like in banking, it's pretty simple. So if you want to beat the banks in every single market, you have to build better quality product faster than your competition. So if you want to do this, then you have to work basically harder and hire the best people and ship the highest quality product for much better value than your competition. So I think like that's the bottom line. And Nick essentially treated the company like a professional sports team. It's hard to get in, it's hard to stay. And this performance culture essentially is what led to, I think, Revolut's success. And yeah, we have the exact same culture at Huspy now.
So ruthlessness.
Yeah, just make the right bets and execute fast. Yeah, definitely. No bullshit and not much talking. That's it. Just like get shit done. Exactly.
I think, I'd add patience, I guess, because it is patience testing. You feel like you've nailed it. You feel like you've crossed every T, dotted every I, and then the regulator comes along and smacks you with a dose of realism and says, actually, no, here's 700 audit findings as to why this product is non-compliant. Now, there's more of a problem here. I think the UK regulators outcome focused, so they don't really care how you achieve the outcome. They regulate the outcome. Here, Saudi, they regulate the process. So they really care. So you spend a long time trying to explain why am I doing it this way. So I find trying to build in this region, you do have to have an element of patience and perseverance and flexibility to keep iterating and moving. But to the point around you stay true to the vision, in the time that buys you or costs you, depending on if you're buying or selling, it's using that to good effect, spending that time to build the better product and get it into the market. So I think you need a bit of patience, and that certainly goes a long way here.
Cool. So before we continue with our questions, maybe worth opening it to the crowd. So anyone has any questions for this distinguished group of people? The path of least resistance to get to 10 million users.
Operate in a market with 1.3 billion people. But I'm being facetious, but I had the privilege to be in WeBank's headquarters in Shenzhen a month ago, and they have on the wall, their clock was ticking up. I was seeing in real time 494 million, however many thousand ticking up in real time, linked to their core banking system, watching their transactions fly around the world. They do over 1 billion transactions a day. It's unimaginable scale. So picking the UAE to get to 1 million users is hard because you need to bank a tenth of the population, and of that population, not all of them are actually bankable because they're children or they're retired or whatever the problem is. So it can help to choose a big market. That's the slightly facetious answer. Maybe Fernando's got a better one.
Yeah, I think, well, you do it a few ways. You do it one at a time, and I think there's a time angle, of course, but I personally think that the penetration of neobanks is much higher than you think, right? So you start to see, like Nubank or Monzo, in particular countries, that they're gonna get, in my opinion, to do bigger than any legacy bank has ever done it, right? Even in countries where you have very famous banks. Why? Because it's easier, right? It takes 5 minutes to open an account. I can experience it within a week or two, and I already retained. So I think you have to remove the assumptions that you're going to get 10% of the population of that country. I think you can go higher than that, and I think you will see that happen over the next few years. So I wouldn't overplay of course, if you're in Brazil or those countries, there's an advantage, the same as the US, although it hasn't panned out. The one thing I want to call out, I think there are two things that I heard that I really think are excellent points. One is that fintech is different, or banking is different, that every outcome matters. So you cannot do a great job for 95, 99% of the users and a bad job for 1%, right? Everybody has to be able to open their bank account and use it. So it requires a level of attention that is, I think, higher than B2C in general. Right? You sometimes use a B2C product, it doesn't work, you move on. That cannot happen in neobanks. And I think, to me, the bigger point, every successful or incredibly successful startup I've seen has this mentality of pushing an athlete or performance or passion. And I don't think it matters where you are. It's more like the people that you see. That's what I particularly love this region. Even I've been here for a month in Property Finder. I see the zest in people's eyes. They want to really achieve something. And when you met the Monzo founders or the people that came later, they have the same. Their eyes light up, right, when they talk about what they're doing. And you need that in these companies, because nobody thought 5 years or 10 years ago that it would be here except them. And I think you need that for any startup, even more than TAM. TAM, I think, is more of a consulting thing. Oh, where's the TAM? Where's the TAM? I barely look at it. Of course, if you are in Uruguay, which is a country close to Argentina that I can mention, it's a bit tougher because it's very small, but you can still be successful anyways, and then take that model to other countries and expand your TAM. So I personally don't think that TAM is the biggest problem. I think it's more like finding people with a zest to do something amazing in one place. And that happens to occur more in the past in the US. Now you see it in Brazil, and I think you saw it in the UK, and you'll see it here, and that's the exciting part.
And maybe just to, just to elaborate on your point, David, if you look, there was a McKinsey study, they were showing, if you look at the total shareholder value, if you take the geography, the vertical, and the scale, it determines 80% of sort of like the TRS. So if you're in China, and you're in wealth management and you're big, you're going to make a shit ton of money, right? So I think that the first two ingredients of don't start in a market that is contracting and that is small. It's stupid, but it's a very, very good point that a lot of people forget about. Another question from the crowd, or shall we continue?
So at the end of the day, people don't like friction. So they prefer to, let's take the example of a bank, right? They don't like to have loan from one bank, credit card from another, your current account in a third, your savings in a fourth, right? So the winning company is the company that's going to offer the full range of products with better value, so ideally cheaper price, and better product, so better value through the experience. So this way, famously, Wells Fargo actually was quite good at it until they became a bit scammy in the US, but fundamentally at Revolut, we follow the same principle. We want you to have all the products with us. For that, we have to, number one, build them better than the others and cheaper than the others. It's that simple.
Kristjan.
I'll kind of give a very simple example to this. So I just a couple of days ago had a conversation with another expat who just moved from London to Dubai. And he was telling the story that when he first moved, he was using Wise and he was transacting on Wise. And then all of a sudden, seamlessly, he just migrated over to Revolut because he got stuck and the user experience just wasn't quite there on Wise, right? And I think that kind of links up to what Fernando was saying earlier, which is if you're in Europe, for example, the account opening experience is so smooth for all the fintechs out there. That's not the hard part anymore. Like account opening is incredibly easy, right? And largely automated for most customers come through the pipe. It's really about how you make the customer stick, right? And so it is a lot about the user experience. And by user experience, I don't just mean UI, UX, I mean the entire customer experience behind the scenes as well, right? And also does the customer find value in the product that they onboard to, right? And so exactly right, like Fernando said, what you very often see with customers is they start trying you, right? They move a little bit of money, they see if the account works properly. If the account works, they'll migrate. As soon as they have a negative experience, they're out, right? And so you almost have this cumulative effect of making sure your communications, your product experience is very closely and very, very, very tight, if you will, right? And so I think that's the trick. You have to be customer focused, you have to be customer obsessed, and you have to love the product journey to make it happen.
Can I ask a provocative question? Do you want to take that one? Please.
I think I completely agree with both of them, but I would like to give a very simple framework to think about this. I think intellectually it's very simple. You know the retention of your customers, you know your retention of your cohorts by 7, 14, 30 days when they use one product, and when you introduce the second one, it should improve. And the beauty, which I think you were referring to, is it doesn't take that many to 1 or 2, there's an inflection point where they stay with you. Because now you're not just have one use case on the side that is not a big part of their life, now you are a big part of their life. And therefore, it's very easy to measure, intellectually assess. Now, to achieve it, you will have to build these products and build them really, really well. Again, so the experience is additive and better. Every new thing you try makes you stay more, and not the contrary. And a lot of companies just go fast, but without caring about the experience. And if you're exposed to something that is not great, you lose that trust and retention will suffer. So I think it's very easy conceptually, very difficult to execute.
So I'm going to ask a semi-controversial question, right? So you were all sort of like, part of companies that were launched in 2015. It's very funny, I hadn't realized that. But if I think back about that period, you're kind of like in the UK, in peak regulatory environment, every bank is building its capital, every bank is spending their money on risk and compliance, and no one gives a fuck about their clients, right? All right, so you have some guys that are like, but that sucks, I can't block my card, like whatever. So you come up with your ideas, all right, well, 10 years, fast forward 10 years, but every single bank has an app. They're not bad. I actually think they're pretty good. They're pretty well capitalized. No, okay.
So my question is like, was it a fluke? And is the fact that banks now invest massively in technology, they're going to be less deregulated? Like, is there space for more neobanks? Let's just talk about the Western markets, not necessarily the UAE. Maybe we can talk about the UAE in a second. And KSA. Sorry, I'm being facetious on purpose, but he reacted so negatively. Let's give him the first one.
I think, look, miracles happen, right? So I think legacy banks that have a lot of legacy code and people who are demotivated and don't have a passion for a great experience, and they have years and years of decadence within them, could turn around. They can, right? And maybe you hire a great founder, like the property, the founders that we love, or a great leader that creates that energy and turns it around and brings all the energy required, which is a lot. And it's not the app, right? It's the experience. Is the end-to-end experience carefully thought, through in the digital world, of course. I personally believe that it can happen. I think some legacy banks, of course, will transcend. They will have great leaders that do that, and they will not be suffering the years and years of damage that they have had. It could happen. Now, probability-wise, it's unlikely, right? It's very unlikely that those companies that have betrayed their customers for many, many years will all of a sudden get religion and build an amazing team. I mean, again, it can happen, but it will be a minority. It will be a vast minority of them. The majority of them will disappear slowly.
Kristjan?
Yeah, so I agree with that point. I think the way I would think about it is, can a traditional bank transform itself? Absolutely can. But let's take a step back, right? And actually understand where the neobank revolution came in the UK, right? And it came from the fact that technology had moved on a lot, and traditional banks became very, very traditional, right? The customer experience wasn't there. It just created a pocket of opportunity. And do I think that neobanking is going to be 100% of market share? Absolutely not. There's an absolute place for Citibank. There's a place for HSBC, but their kind of UVP and their skill isn't building great customer experiences, right? Their skill is doing international banking, right? And so if you run a large corporate that does lots of transactions all around the world, you're not going to use Revolut for that. You're not going to use Monzo for that. You're going to go to Citibank and you bank with them, right? And so I think there's a time and place for a fintech revolution. And yeah, I think that's mostly behind it.
Marc?
Yeah, I think long term, it probably won't exist. There's a simple reason. Banks make money with lending. If you want to lend at a good price, you need to have low cost of capital. To have low cost of capital, you need to run at very low OPEX, right? So you need to have basically a very lean base of employees. But banks can't do that, right? They essentially, the way banks are built, especially international banks, to your point, is they basically have a software per country, to oversimplify, right? So their lending engine is different in the UK than it is in France, than it is in Italy, than it is in the UAE. So as a result, they can't scale properly, right? They just double and double and double their OPEX. So as a result, they have very high cost of capital. I think that companies like Revolut, eventually Monzo, of course, will just the reason they're not there already basically is because you can't scale credit overnight, right? Credit, just you have to go through credit risk cycle, 6 months. So I think it's just a matter of time that Revolut will just have all the lending product, including trade finance, including commercial real estate. I mean, I was building them before I left, so it's just a matter of time until just Revolut goes through those cycles, and they will just provide cheaper products. And for companies, they don't care too much about, and the big ones, I mean, they're very sensitive to cost of lending. So ultimately, it will just go so low for banks like Revolut that those guys won't compete. So that's the math, in short.
I can keep going.
Let's give David his take, and I want to hear from Khaled too.
It's borrow at 1, lend at 2, go home at 3, right? That's the banking business model. That's what you want to do. And if the banks get out of their own way, they can destroy any neobank before it gets out the gate. They have infinite financial resources to do that. And in some markets and in some cases that has happened. There's been a squeeze and they get closed down. In some markets there's even regulatory pressure that stops that from happening. But in some cases, very prominent examples, the cat's out the bag. They've done it. And there is scope. And it's, you look at, I think Weo's launch here in the UAE was a good example, or an interesting example, because you couldn't move in the UAE for 6%, right? You turned on the radio Virgin, 6%, Weo time check. You go down Sheikh Zayed, Weo 6%. And they amassed, whatever it was, 3 billion dirhams worth of deposits in a rapid space of time. It wasn't a million customers, but it didn't matter because they attracted so much capital. But that strategy usually doesn't work, because if Emirates NBD had wanted to, they could have launched the 8% account or the 10% account, and they can afford it. They can set fire to money while they watch the challengers run out of capital and watch the VCs decide this is a stupid waste of time because I'm getting squeezed out of existence. But they're so bad at organizing themselves that they can't even do that in most cases. So I'm with you. Like, I like some of the incumbent banking experience. HSBC in the UK, they actually just changed it and they made it worse again. I go back 2 years ago, I actually quite liked it. They introduced investments. So I was suddenly like, oh my God, this is actually usable. But it still wasn't access to it. So they weren't their only way they could justify. The world's local bank, they still can't capitalize on it unless you're a high net worth, where they've now launched their global experts. So they just can't get out their own way.
Khaled.
Yeah. I mean, I'm going to ask a question back to these guys, but I think I very much agree with what Marc is saying, is that, you know, as you get scale, as you get deposits, as you are able to, lend out, to customers, you get more fees, more deposits, as those deposits come in, cost of capital keeps going. Because I think at the end of the day, banks really make money in that major way, which is lending, and then, a little bit of on the transaction side as well. The only thing that I want to kind of challenge now these days is, what used to happen before when we were talking about these 200, 250, challenger banks that were out there. What they would come to us and say is, okay, great. One of us wants to do a consumer-focused one wants to do an SME-focused one. And I feel like, no panel is a panel that's done without the talk about AI or personalization. So I want to bring that a little bit into it. And mostly I want to bring into the conversation is, with AI allowing things to happen at a cheaper cost base, the teams probably don't need to be as big anymore. Yes, you still have like a certain amount of regulatory capital that needs to be there. Do you think maybe another way that we could possibly go is towards more personalization on the banking side? What does that mean? Right now we have SME banks as an example, but could we have something, at one day where it says, we're just going after construction companies, or we're just going after, restaurant types of companies, or is the cost structure still doesn't work for it? Oh, yeah. I'm gonna give it to Marc, but just because he's.
Yeah. So is your question if you can have specialized lenders essentially? Yeah. More or less. Okay. I mean, you can, but the truth about business lending is. Like the way it works is different. The way it works is if you want to get big businesses like mid-cap, large-cap, they don't come to you because you can offer them a good loan, for commercial real estate or something. They typically do all their lending with one bank that can give them everything, and space is so competitive that the banks will give them all the other products, credit lines, unsecured loans, trade finance at a loss, so that they can sell them the commercial real estate loan, which is where they make the money, or whatever, the invoice finance. Depends on the strategy and the sector that they go after. So I think for a specialized lender, I don't know. It sounds a little bit far-fetched. At least I didn't hear about it. I think it's probably the generalists that do it all that eventually will duplicate, in my opinion.
Fernando?
Yeah, I'd like to address your first point of, there are 300 neobanks, only 10, 20 achieve scale. And that is true, right? Because if you think about what a bank is, at the core, it manages risk. That's truly the core function of a bank. And of course, lending is a way to monetize that, right? But you manage risk, you're an extension of the governance of that region, whether it's Europe, there's a regulator that manages that, or the UK, or any country. So to manage risk to a certain level that reaches that criteria requires quite a bit of sophistication, right? And effort. That's why you had amazing founders and amazing leaders, because it's very hard to do. On one side, you have that problem. On the other side, you have the curve of revenue and profit, which he referred very well. It takes time to build that, particularly lending, because it has a very tactical ways that it takes a few years to see that revenue coming in. So it's a lot of investment at the beginning, you see the benefit later. And that's why a lot of folks said, oh, neobanks are not that great 3 years ago. They just did not know what they were talking about, truthfully. So AI to that point might make the first one a bit easier. In fin crime and other areas that take a lot of effort, be less manual and more automated. So hopefully the managing the risk part will be a bit easier. I think the second one will still remain, to his point. I think personally that crypto is a bit more interesting area of disruption here than AI. I think AI will make things easier, hopefully, and lower the cost even more, which also will go in detriment of traditional banks, because the cost of service will go even further down. But you always have that very high bar. So I'm not sure how far it will go, but it will go down. I think crypto is a much more interesting way of seeing who are now the innovators, neobanks or not, that ride that wave and deliver the experiences people are looking for.
So just on the AI point, I oscillate probably like a lot of you in this room between existential dread of, oh my God, I'm not going to have a job in 5 years, my son will never find work because everything will be AI, to the average guy walking down there on the street doesn't know what ChatGPT is and he doesn't care. And I go between the two polar opposites. My LinkedIn echo chamber doesn't help because everyone's publicizing their agentic AI workflows and how they've disintermediate a 50-person marketing team. And if you just comment something stupid, I'll give it to you. So I think it's interesting, but it goes back to, again, fundamentally, there's a real risk, and an organization I worked with recently have the challenge of it's shoehorning it in for the sake of it. Like a good example is, let's do conversational onboarding. But if the conversation is just a new way of expressing the UI, it doesn't change anything. I still have to submit the same information and go through the same process. Bank doesn't monetize that. I'm just doing it via a chat window versus then 6 sequential screens. So it still has to go back to what problem am I solving, or what desired outcome am I satisfying from the job to be done for the customer that is currently unmet? And is that enough to incentivize more use case? I think the real value of AI for banks is only really available to neobanks and banks that have better technology. Because go back 10 years, it was big data. And then it was RPA, and now it's AI, which is a combination of the two, because I have big data that is being automated by something. And big banks failed with big data, and then they failed with RPA, and now they're going to fail with AI because it's an architectural issue. They can't do it because they can't get enough access. Whereas neobanks have the ability. The power of AI is going to be, banks hoard data like dragons plunder. They have so much and they can't access it themselves, let alone give it to you. But as a neobank with a better architecture that's more ready to let the technology run wild in terms of doing analysis that is personalized to the individual, but it's the same technology across every user, that's the most power for me. Like, if my bank told me, hey David, you spent 4,000 dirhams on Amazon last month, what the hell are you doing? I would like that, because I'd like to go, oh my God, I've got to stop buying random stuff from Amazon. And that's the type of insight you can give, and that incentivizes spend. And then if I'm incentivizing spend, I'm earning fee income. And if I'm earning fee income, then I can do BNPL. If I'm doing PNPL, why not credit card, and so on. So that's, I think, we can't get enamored with the technology for the sake of the technology. It's about what's the use case.
Cool. Also, coming from a big bank myself, I think they're a bit tough on big banks. But that's for maybe another panel. Let's talk about hypergrowth for a second. And look, you grow fast, shit breaks. Can you just tell us, maybe give us examples of something that broke or something that you would do differently to manage the growth?
That's why you're looking at me. Question for some. Like I said before, there are a lot of controls in a neobank or a bank for that not to occur, right? And for that not to occur and reach a customer, right? Of course, you can be trial things internally and then try it with a small group of people, but there's a lot of controls to ensure that's not the case. So honestly, I think that, and that's the beauty of it, there's so many layers of protection that is extremely unlikely. You might have a case of a product that maybe didn't have the traction that you thought, but at least in my experience, there was nothing that was broken or notoriously broken, because again, there's many layers of redundancy to check that what you're shipping is actually good outcomes for customers. So the velocity is more around, how quickly you want to try new things and go through the process to get them approved and go through all that pain, because it requires a lot of paperwork in many cases, more than the risk of, you don't want to create a product that doesn't exist and then the money disappears. That's not a thing, right? That doesn't happen in banks or in neobanks. I don't know, there might be exceptions, but at least not the ones that I know.
Team-wise?
Yeah, so I think the closest I've ever come to realizing how easy it is to kill a bank is when we bid for SVB UK. And if you guys remember, SVB went belly up in the US, but actually SVB also had another arm called SVB UK, which was an incredibly successful bank. They were generating roughly 120 million a year in profit. And I think it kind of echoes maybe a little bit what Fernando was saying, is that in banking, you sort of have to get things right to the T. And obviously they had maybe not a small failure, they had quite a big failure. But the SVB UK bank was actually not the responsible one, right? It was a complete kind of wave effect that came over. But I think that was like a really strong signal to if you work in fintech, keep that at the back of your mind, right? Is that make sure that you think through these things, and that could be your customer experience, that could be your transaction monitoring system, that could be your customer care, and increasingly more AI, right? I mean, the number of stories that I hear from people in the industry that are friends where AI customer care has completely started hallucinating to users, something to look out for. But yeah, so that's probably my story of how the closest I've ever come to a belly up bank.
So for Revolut, I think we never really broke anything. I mean, there were problems. I would not say like broke things, but I think we did a few things right that make us, let's say, keep the lights on better than other banks like the Barclays and the Lloyds. I think the best decision we made is to not rely on QAs internally. So that was a big decision for a simple reason that POs and engineers were responsible for the quality of the product. So once you're responsible, accountable for it, you become a little bit paranoid, because if things go wrong, there's no QA to catch it. So as a result, you don't sleep at night, you're thinking of all the edge cases, and when it's time to ship, you're shipping high quality code. So the things rather that really are very, very difficult to solve is your fraud detection models, everything related to FinCrime, because we were, even today, Revolut is like onboarding 1.5 million users per month. So early on, it was very difficult not to make that experience, let's say, subpar for 0.0001% of users, but because we have 55, so that's the challenge, right? Eventually someone will get locked away from their account. That makes a lot of noise. It kind of breaks the trust with the rest of with the brand. But this is a very difficult problem to solve. But I think with AI, fraud detection models will get better with time. But I would say that's the thing that we didn't get right early on.
There's some good examples, I think, would be when you're building particularly the MVP, and with banking, it's harder in banking to do real user testing, because you have to meet the regulatory hurdles in order to launch the product, and to reach the regulatory hurdles, you have to finish the product. And unless you're speaking to users all along that journey, not in an actual transacting way, but in a prototyping and basic user research, if you forget that fundamental of building products, you can end up spending 9 months on something and 20 million pounds and launching it to a market where the market goes, okay, I don't want that. And then you're stuck. And I've I fell victim to some extent. There were reasons why, because it was a build during COVID, so it was a bit harder to access users. People weren't so interested in that type of thing. But so it wasn't full on complete catastrophic, but there was a lot of then rework that had to happen post-launch to realize why we missed the mark. And that's just forgetting fundamentals, and that becomes a big challenge. So I think with banking, again, the investment needed to get functional products, particularly at the start, at the beginning, when you're not an established player with a 7-year track record, with licenses, you need to make sure that you're not forgetting to engage with people to keep revalidating that use case.
Questions from the public?
I think some of what Marc was talking about is key to that, which is a concept of ownership of what you develop. You're not lobbing code over the fence into production and then working on the next thing. The code you put in is your code. If it goes wrong, it's your problem. You make part of the delivery culture, not just software engineering, exactly as you said, it's product ownership culture as well, design culture. What you ship is yours. So if it isn't working, it's your problem. You're the one who's awake at 3 a.m. trying to figure out, why is this not working? Where's the break? When the regulator comes in and starts to question, why is this non-compliant? You're in that room. You're explaining the process you went through. So I think it's quite difficult. Again, banking loves decision by committee. You'll have seen a lot of this obviously in bigger banks, because the bigger the deal, the more people they want to share it with, because the numbers get quite scary. I mean, you deal with that a lot as well. And so it's making sure that there is a culture of accountability in what you're delivering, and you are speaking to the right people. And a big challenge I've always experienced is it's getting easier, I think, as more compliance professionals, fin crime professionals you're also talking about, and I'm more used to working with more technology and delivery. And it's engaging those people very early in a process, making sure, yes, I've got a cool idea, but is that cool idea actually within the guardrails? It's like a horse race. You've got the fences on each side. I can run anywhere inside, but I have to be inside. So it's engaging the right people along that journey as well.
Build, buy, invest.
So I have a very simple mental model for that, for the first two, which is build or buy. So I think the world has moved on in the last 10 years. There's actually quite a lot of decent SaaS software out there to build a bank today. So if I was going to build a bank in Europe today, I would probably build it out of Lego bricks for the most part, for all the things that are non-differentiating for the company, right? So what I mean by that is, not buy legacy software to power your bank, but there's quite a good software out there today to build bank cores and payment systems and things like that, right? But I think where you probably will find when you scale enough, there are limitations to all those systems, right? And so what you absolutely want to be in hold of is everything that is remotely differentiating in the market. And so that's been the mental model personally. Things that are differentiating, build yourself. Things that are non-differentiating, you buy, except when there's a scale question, right? So some software doesn't allow you to scale to a certain extent, then you need to also build it. I think invest, maybe the neobanks are not like that well known for this, but I think investing is, can be sometimes derail you, or it can derail you a bit. I think when it's ancillary to what you're trying to do, right? So, for example, in my previous company, OakNorth, we had a ventures arm, and we very often invested in companies that were ancillary that we thought in 2, 3, 4 years' time will have a strategic aspect to it. And we didn't just throw money around. We sort of chose companies that we thought that were, perhaps the future providers for us in the future.
I mean, for us at least, it was always built because essentially, if you believe your company is going to scale, if you buy third-party software, you would often do it better yourself. So it might get you to market faster, but ultimately you don't own the code base, you don't own the IP. So when you want to change and tweak, you have to go through people, and also it's expensive. So at least at Revolut, and it's the same at Huspy, we invest upfront. Yes, it will take us some more time, but if we have good people and we think we can solve the problem better, we just accept this time spent building ourselves. But we know that for the 5-10 years to come, it will have been the right decision. Otherwise, afterwards, all of a sudden you realize Salesforce doesn't solve your use cases anymore, and you have to migrate and all this headache. So
Never does.
yeah,
Salesforce never does.
yeah.
If anybody knows the case, let me know.
I think Huspy will replace Salesforce personally, eventually. Yeah.
I'll add one thing. Look, at the end, of course, Revolut, Monzo use Amazon, right? I will imagine. So we didn't build our data centers. So that's actually correct to an extent. But I think the main point, which I completely agree, is the ownership sits within you, right? There's no case of, I get a provider, customer couldn't care less how you deliver the value. So you have to fully own the experience. And you have to fully own the experience for the next 10, 20 years, right? So you need to fully own it and innovate on it. So every decision you made that moves you away from that, and now you have a dependency in a partner who you don't know that well, you don't know if they're going to innovate in the next 5 years, is dangerous. It is quite dangerous, I think, for any company that wants to lead in the market. So I will be very, very careful on those decisions. We took it, of course, with Amazon, although in banks you have redundancy on the cloud providers as well, but obviously there are dependencies, but I think the most minimal is important, because the user, you cannot say the user were down because this provider is not working, and it's much easier if you own it, because then you fully own it to the points we made before, and you're accountable for the experience from beginning to end.
I agree. It's definitely, and I think you guys come from two of the exemplars of ownership in terms of building the stack, and what Monzo was able to achieve with the grey bank, I think is testament to the value. When the main bank falls over, they've built that version with no real, UI color scheme. I think that's a good example of the value you can create for yourself if you own the value chain. And WeBank, who I mentioned earlier, they own everything all the way through to the data centers, and they're the extreme. And because of that, at the scale they're at, their cost to run is mind-blowing, low. But I think it's also, for banks in particular, if you think about building stuff, FinCrime's a good example, core banking's a good example. You have to be really sure you've got an expert sat next to you to develop. So as a product person, as someone who studied CFA, I know enough to be dangerous and I can do a good job, but I know enough to be dangerous both ways. I can make some pretty epic, confident mistakes in that process if I'm asked to build a core banking system myself. I'll forget accounting is different. It's 30 by 360 in Germany, but in the US it's 30 by 365. And I'll screw up the accounting, the auditors will slap me and the regulator will hit me with a fine. So you need to make sure you've got the SMEs around you that are willing to undertake that. Because my experience working with people who come at challenger banking from an institutional banking background, and again, this isn't universal, it's a different skill set to build a tool. Asking someone who's a great financial controller in HSBC regionally in the UAE doesn't mean he can spec a core banking system for you, just because he understands IFRS 9, Basel, and all of these things. So if you are going to build, it's great, but you have to be really confident that you know exactly what to build. Because the other thing from a bank's perspective is the regulator. If you go into the UAE central bank tomorrow with a banking license, saying, I've built my core banking system from scratch and all my FinCrime tooling, including AML, KYC, and fraud, you'll watch the color drain from their face as they don't see a brand name. They don't see Salesforce. It's like, oh shit. Now we're going to have to actually understand what they've built. If they see T24 from Temenos, oh, thank God. That definitely will be fine.
And just being on the sell side, because we sell software to banks, so I'm gonna disagree once again with Fernando. But I mean, I think in your example of securitization, I don't think there's a single person in the GCC that knows anything remotely like close to securitization tech. There's no, try to find one professional that's in the business that understands securitization already in the GCC, right? So it points to the example of, do you have the scale of talent, to your point, to actually sort of like own that capability? And there's a second point, which is, does it make sense economically to maintain that platform? It's certainly, I'm certain that it does not, in the case of an ENBD, to maintain a securitization software. So you invest, you keep a bit of control, it makes you feel good, like, okay, great, right? But you're essentially buying too. So yeah, I think it's like, in our case, the pitch is always, it costs $60 to $80 million to build a wealth platform, at least in our case. So if you're a bank that's not $200-300 billion big in terms of assets, it doesn't make sense for you to do it. That's at least like in our case, sort of like the conversation we have with clients. There's not a single client in the region that's built their own, by the way, wealth tech platform, just as an example. Well, I think that brings it to an end. Right? Is there someone who has a burning question that we haven't? Better be good. Better be good.
I'll go. Yeah. I think, look, the basic of finance have not changed that much. Saving, investing have been the same, right, for a long, long time. They go back hundreds of years. I think what might change quite a bit is the methodology to do that. What right now is through centralized institutions, right, or governments. And when you started to see, of course, with crypto or Bitcoin or DeFi, is an idea, a concept, which in my opinion is still very nascent, of something that is not managed by centralized institutions, right? Like it's always been. So you can save, you can invest, you can do all those things in a decentralized manner. I think that's less of a technical solution, in my opinion, and much more of a geopolitical or government type of equation to lose that control. It's interesting what you see in the US right now, and it's hard to know where the governments will go, because at the end, remember, a bank manages risk for some government in one way or the other. You're an extension of the financial system. So you will expect as a technology that decentralization is the answer, the same way you think that Bitcoin will hold more value than a currency who has a human being making decisions. So, but it's in my opinion, it's hard to predict, because it really depends on the humans in power, where does it go?
I'm not going to try to predict 15 years, so let's try to predict a couple of years, because I think 15 is a long time. I think we've spoken a little bit about kind of maybe using AI in banking and how that's going to help operations and customer call centers, and maybe transaction monitoring. I think that's like a little small part of it. I think the value actually is in how AI will transform user interfaces completely. And I think this is something that people will see in the next couple of years, where user interfaces are hyper-personalized to the person that is looking at what they're doing. And there's already some pretty cool companies out there that do this, where your entire UI, UX is completely personalized to you. And so I think that's definitely going to happen within the next couple of years. Pretty strong bet. And we've kind of run some pilots ourselves actually in this, and we've seen customer satisfaction be way better than being kind of traditional interfaces. I think there's like a money concept as well, absolutely. But I think the way you probably consume banking today will be widely different, even in 5 years, than it is today.
Ask me what I'm eating next week. Maybe I can tell you, but I literally no idea, man. If I can bet, I would say at the end of the day, AI is gonna make us better at pattern recognitions. So possibly just a correction on the risk side. We'll just be better at predicting risk at the macro level and at the user level. So yeah, there'll be maybe some adjustment in pricing. I would guess all those new products are going to be commoditized. Cost of credit might go down. Similarly, saving rate might go down. But literally, like it's impossible to know. Yeah, I don't know.
Yeah, it's certainly hard. I mean, for me, I've gone through different iterations thinking about this problem, because when Kristjan's former colleagues in the US nearly blew up the US banking system by proliferating that sequential bank run in a bunch of mid-tier American community banks, I thought, okay, is this going to be the precipitation for the conversation about moral hazard and the problem that private institutions controlling what is now so intrinsically linked with how human beings survive doesn't necessarily make sense. You can't ask us to go evaluate the balance sheet of a bank to assess its financial reliability to choose it to place my money there. But if it goes bust and I lose my money, you know, so that I thought that problem would be interesting. But then obviously, institutional interest is so strong, and you just have to look at SWIFT as the example. There's a reason why DLT and blockchain hasn't become a more prevalent the use cases in international remittance. It's not because the technology isn't necessarily a good solution. Yeah, there's some scaling problems. It's because the incumbents don't want it, because then they don't have the control and they don't have the visibility, which is what they're all about. So then that macro trend is going to keep playing out as stablecoins become more and more prevalent, as the UAE is doing a lot, obviously USDC, this stuff is huge market caps now. I think, but it's the point around personalization, hyper-personalization. I think it's banks will become commoditized to the extent they don't really need front ends anymore. What I think we'll start moving away from I'm logging into my bank to everyone will effectively have what looks like a private banker that sits for them, which is specifically knows their financial life. If open banking continues to develop, banking products will be made available via API. So you just ask your agent, hey, this month, where's the best place to put my money from a savings perspective? Emirates NBD's got an offer this month. If you do that, you'll earn an extra 250, but you should also be aware, and you just execute. You don't have to do the same thing. Ideally, your identity will be data shared automatically again. There's plenty of solutions to that. So I think it's going to get increasingly frictionless, and the amount of time we're going to spend in an app that's specifically for that purpose will probably start to collapse. And from an SME perspective, it's, does the bank become the ERP system, or does the bank embed itself in the ERP system so the user is never logging out of one place? I'm doing my invoicing, I'm doing my payroll. Why am I going to a different portal to execute the payment I just approved over there? So again, is it the bank becomes the only front end, or the bank loses its front end and morphs itself, commoditizes itself behind the scenes of other players? But that smashes margins into oblivion. So again, it's not easy.
That was a great question. I do think we're very linear in how we think about the future of AI. And I think a lot of what we talked about right now, it's still within the framework of what we're seeing. 15 years from now, the structure of society will have changed. Digital currencies that are government-backed. Maybe you don't need a bank anymore, right? Like it's not impossible. So, right, I think we all want to go home now.
Yeah, thank you to the speakers, moderators, Huspy, thank you for coming tonight.